Zaggle, because we've got a lot to cover in the next 1 hour on Trading Hour. Now, Zaggle reported a good set of revenue, a good set of quarterly performance. The revenues have gone up by more than 100% on a year-on-year basis. Raj N, the founder and executive chairman of Zaggle Prepaid Ocean Services, is with us on the show. Good morning. Thank you for joining in. This is Rima here. So, despite a more than 100% revenue growth, 112% to be precise, you're still holding on to your full year guidance of 45 to 55%. Why is that, and what is it that you expect in terms of the top line from Q2 to Q4?
Good morning, Rima. So I am very tempted to, increase the guidance, but I will hold on till about Q2. The picture would become much more clearer in Q2, and then we will be able to, maybe up the guidance. But as of now, we would maintain, what we have maintained, which is 45 to 55% growth.
But there is a high likelihood that in Q2 you will be able to come out and raise the guidance. But is there some sort of a slowdown that you're seeing which makes you a bit conservative? I'm not calling you cautious, but conservative when it comes to your guidance, because on a quarter-on-quarter basis, your revenues have come down by about 8%.
No.
So is there some, yeah.
That is because of the seasonality in the business. Our Q1 and Q2 are typically 35 to 40% of the overall revenue. And Q3 and Q4, which is typically the H2, is about 60 to 65%. So there is no, revenues have not. So you always compare us Y on Y, because that is the real, way to measure it.
Okay, so on top line, you remain fairly confident, sir. Let's talk about the margin trajectory. As per, I think, our calculations, margins are somewhere around 10.7%. Tell us if you have any other number there. Now, compared to the previous quarter, again, if I look at, Q on Q, that's a big dip. It's almost 100 basis points dip. But year on year, obviously, the margin has improved a lot. So what is a sustainable run rate that you're targeting? Say, by the end of this year, where would you want your EBITDA margins to be at?
So the EBITDA margin, we would maintain in, low double digits is how, our estimate, and the guidance which we had given, would remain about in the 10 to 11% range. Revenues, of course, we are looking at, growing it at a higher speed than, what we have suggested. But again, we'll maintain, till Q2 and see how Q2 comes, and then we'll be able to give you a clear picture.
What are the margin levers that you're working with when you say that you'll maintain margins at 10 to 11%? Just take us through some of the levers that you have, the kind of tie-ups and the deals that you're getting into. What gives you that confidence?
See, but there are 4 levers to be very precise with you. One is the number of customer additions which we do. That is one. The second is the number of, employees within the corporate who grows, as they grow. And the third is the, amount of spend, which they are doing. And plus the fourth is the new product, Zoyer, which we have added. And so all of these are performing exceedingly well. And, margins, if you look at it, compared to Q4, of last year, our margins have improved in the Q1. Compared to Q1 of 24 versus Q1 of 25, there is a little bit, but otherwise, margins Q on Q have improved.
Okay. Got that. You've been actively talking about pursuing an acquisition. You've said that in the prior quarter. Even this time in the press release, you're saying that in line with our growth strategy, which is doubling revenues in 2 years on an organic basis, the company's also focused on inorganic growth opportunities to enhance their leadership position. Where are we on this front, on the M&A front? Have you identified any targets?
So, so there are 2 strategies which we are following here. And the reason we do, acquisition is basically either, these are EBITDA accretive acquisitions. Second is they give us product accretive, or, they allow us to enter into a new geography. These are the 3 things which typically, are our drivers to do an acquisition. So, one, we will announce probably, let's say, within 30 days from now, which is basically not a very large acquisition, but a tuck-in. Then the second, we are working on a large acquisition, but as you know, between cup and lip, there are slips, And especially, when you're talking to a larger company, there are a variety of reasons which you have to, cover for. And that's why, last time also I had told, Mangalam, that about Q4 is when, the picture would become very clearer on this large acquisition. But we remain very bullish that we will be able to go ahead and do this acquisition.
Okay, so the inorganic route is open. You're growing organically as well. Just give us a target. It's a tuck-in acquisition that you're saying, but on the two important parameters, which is the number of customers that you're serving, corporate customers, and total users on the platform, what are you targeting by end FY25?
See, what has happened is, if you look at it, Surbhi, we have to go and do more of cross-sell, within our base. Our base today is about 3,100 odd, corporate customers. That's a very large base. Now, we have to spread them more so that, whatever more money we make from them, directly goes into our PAT or, improve our margins. So what we are seeing is that, across board, there is tremendous amount of requirements which are coming in for digitizing the spends. And the more and more we are entering into a corporate, we are finding, various different use cases to go ahead and, implement them. And across world is what I would say, companies have come out with a very clear-cut thought process that they need a bundled software, these companies which offer like one particular software and then another company comes in, provides another software is not the theory which would, sail. Now people more or less corporates, want a bundle, which is that, you come in and, you fix a lot of their problems related to productivity, cost coverage, as well as ensuring that, you give them a lot of transparency and productivity improvement.
We leave the conversation here for now. We look forward to hearing more from you about a possibility of a guidance raise, a tuck-in acquisition, and of course, even a large acquisition as the year progresses. That's Zaggle for you, also confident about maintaining margins at current levels. We will slip into a break. We'll come back and focus on the big story, and that's market regulators SEBI's sweeping changes to index derivatives. More on that on the other side.